Welcome back to Moving Markets, and thank you for joining us today. This is the 5th episode of our crypto series. Today, I'm joined by Michael Schneider, wealth advisor with the team. Today's topic is NFTs. Michael, what's an NFT?
So NFT stands for non-fungible token, and it is a unique digital asset that you and only you own. And these, have been around since about 2014, but over the last couple of years, they've really gained a lot of popularity, and you're seeing a lot more activity around them in terms of different types that are out there, as well as a lot of new investing that's going into them.
How do they differ from cryptocurrency?
So that's really where you look at what the word fungible means. So with cryptocurrencies such as Ethereum or Bitcoin, whether it's the first token mined or the last token mined, they're the exact same. Same thing with a dollar. A dollar in my pocket is the same as a dollar in your pocket. However, with an NFT, each asset has its own unique signature. So there are no two NFTs that are the same.
And maybe one of the items that comes to mind is like a sports ticket. So if you think about a football or a baseball or basketball game, there are only so many seats. Each seat is unique. You don't sell two tickets for the same seat. So
that's exactly right. Right.
So as we look at the next area of how do they work?
Mm-hmm. So NFTs, they're really a way for content creators and different types of artists to sell their creations in a digital space. And as we mentioned, you've got different types of art. You have sports cards, baseball cards, basketball cards that are now being created on a digital platform. But you're also seeing more unique things such as tweets or music or even designer sneakers that are now becoming a collectible asset for people to buy, sell, and collect.
Are they free? Are there charges?
No.
How does this work?
Sure. So, for Ethereum or for an NFT, the way it works is that you have the content creator that creates their digital asset, and then in order to sell it to somebody, they need it to become part of the blockchain. And for that, there's something called gas, or it's sort of the fee that they have to pay for a crypto miner to process the transaction and have it added to the blockchain so that the actual sale of the asset goes through.
And as you're talking about this, a regular world use of recording for fees, reminds me of real estate. If you buy or sell a piece of property, we all have to pay recording charges to have that recorded for tax purposes in the local and state governments. And as we all know, having bought or sold real estate, it's not cheap to pay some of those recording charges. So how does that maybe differ? How's it more efficient maybe in the NFT process?
Well, if you look at it, you take the real estate recording process and make that digital, not only does it reduce some of the paperwork, reduce some of the time and some of the costs, but it also increases the security. It's not as though somebody can go in and impose a different address or a different dollar amount on the paperwork, and as you're signing 100 documents, you might not catch that. If it's on the blockchain, it's much more secure. It can't be altered in the future, and it does provide that extra layer of security for people moving forward. So outside of different art or music or sports cards, as we mentioned, there are a bunch of other applications that you could see within NFTs and the crypto market in general.
Let's go to the next. How do you buy one?
Sure. So what you want to do is set up a digital wallet or a crypto wallet, and what you'll have to do is buy some different cryptocurrencies. Again, the popular ones being Ethereum or Bitcoin, and converting your dollars or whatever currency you normally use into cryptocurrency, and then using those tokens or those coins to buy the NFTs on those different platforms.
How big a market is this? There's a lot of business done here. Is it small?
For sure. It's definitely growing. In 2020, only about $95 million worth of sales of NFTs went through, whereas last year, 2021, it was about 25 billion, which is a huge, huge increase. And we could expect to see that number double again, even this year.
Oh, that's amazing to see the growth. So with that, we sort of want to conclude the fundamentals of cryptocurrency. As we recap kind of what we've gone through the first 5 episodes, we really wanted to kind of lay a baseline of general understanding as we continue to learn together as to what's ahead. stay tuned for more crypto content. We want to go into maybe the outlook for this year and then dive in a little deeper on some other topics. Meanwhile, feel free to reach out with any questions. And with that, we want to thank you for tuning in and listening.
All right, thank you, everybody.